Okay, we're going to go ahead and do a little bit of green screen light backrooming here while we wait for everybody to trickle in. Welcome, welcome. While we're getting kicked off, Andy, since we're starting off, do you want to go ahead and introduce yourself, sir?
Yeah, absolutely. Andy Runyon, partner risk advisor here at Fifth Wall Solutions, and just a general cyber insurance nerd. Been dealing with this since 2019, which you know only seems like 6 years ago, but in the world of cyber insurance, we were just kind of having a spat about this online the other day. 6 years in the cyber insurance world is a lifetime, right? A
It
lot has
feels like
changed.
Gandalf standing at the bridge. I'm like, oh man, so much
Yeah.
time has gone by.
Yep, for sure. But no, spend a lot of my days talking with MSPs across the country around their client cyber insurance, their own errors and omissions, and just anything that involves cyber liability.
Now, Andy, let's go ahead and get your credentials out of the way because I've been talking about cyber insurance for, like you said, it feels like an eternity. I guess it's been 6 years now. But I
Correct.
am not a licensed agent, so I can only get
Correct.
to a certain point of advisement. Why don't you talk about, your credentials and how what your expertise is in this field?
Right. So licensed insurance agent, licensed property and casualty, cyber insurance comes with that. Working on cyber insurance specialist as we speak right now through the Cyber Insurance Academy out of Tel Aviv, Israel. So I'll be able to add that designation here within the next couple of months.
Some love it.
Yeah, no, excited about that. And essentially, for those of you that are on the call, the way this works is MSPs are getting drugged more and more into this liability and risk consultation naturally, right? But at the end of the day, questions like, what about this carrier? Am I carrying enough insurance? Are my limits good? What about this
That gets
coverage?
Logan in trouble with the judge. He advises
Yeah,
that.
that's it's not really part of professional scope for an MSP. So Fifth Wall partners with folks like Logan across the nation that essentially say, hey, I've reached the end of my rope. I need a licensed professional to pick this up, and that's where a licensed property casualty agent, hopefully one that specializes in cyber insurance, steps in.
And to give context here, because we're going to dive in after this, my name is Logan Edmonds. I'm the CEO of TTS. And the reason we reached out to Andy is exactly what he said right there. People are looking to know what the heck is going on in the world of cyber insurance. And it is not your normal insurance or business policy. It is changing at light speed compared to the rest of the market in the insurance space. Like you said, the last 6 years, it's probably changed that many times, right? Six different times in terms of
Sure.
major trends and moves. So we're going to go through 2024, 2025, the market and what's going on. Let me go ahead. We got introductions out of the way. So let's start today off with the big question on here. Andy, I know you're biased on this, and I am too, but the
No,
question
no.
everyone's going to ask before they ever look at this subject is, do I need cyber insurance?
Do you have revenue? Do you have data?
Yeah.
Yes, of course, yes, everybody does. And I mean, it's cyber insurance is becoming, understand, newer line of insurance hadn't been around for the hundreds of years like fire,
Mm-hmm.
or the 100 years that auto has been. But if you look at the modern landscape of how businesses transact and the money that's changed and the data that's held, more and more we're seeing cybercrime shift down to the small size business. So
And you should
yes,
be
I
seeing
think.
my screen. You should be seeing my screen right here, and
Yep.
that you hit the nail on the head, right? Like the number one thing I used to hear, and it's been less and less each year, but especially back when we first started having this conversation, 2020, 2019, really diving into it was such a small business compared to the big Goliaths in my industry. They're not really ever going to come after me, right? And year after year, we go through the stats and say,
Right.
not so much. If anything, small businesses seems to be a preferred target. And when we say small, we mean under 250 employees typically.
Right.
We see anything from 1 in 10, it looks like in 2023, were attempted to be hit by ransomware. We see the costs of breaches, and we're going to talk about that later in the presentation, rising year by year. It costs more and more expensive when you get hit. And yeah, I mean, we're seeing the average median. Again, we're taking, when you say what the average data breach cost is, I feel like that's a bit of a disingenuous stat because that can range from mom and
Right.
pop to Fortune
Right.
500. So if you look at the last stat in the slide, I tried to limit under 500 employees, right? What's the
Right.
average amount that company is going to spend on a cyber breach? 8.13 million. That's what's the average median cost we're seeing.
Yeah, and I'll tell you, I mean, we can even go down lower than that if people are concerned about it. I saw a Sophos report this summer that showed that between 0 and 10 million in revenue, so that's small, right? That's as small as you get.
Yeah.
That the average all in for those guys was like 1.2, right? So even at the smallest bracket available, I mean, you showed 500 workers there, or 500 employees. Even if we go down to folks that are 1 and 2 million in revenue, we're still seeing an average cost in the seven figures.
So, I this thing doesn't get enough talk. And just to give context, I like to paint scope here. My brother lives in LA, and right now
Hmm.
the LA Palisades fires, it's a mess out there, right?
Right,
And we're seeing ranges of, I've seen conservative, I have that slide here around 32.5 billion in damages, upwards of I've seen like 300 or 400 billion, right? The
right,
World Economic Forum is estimating that this year we're going to see somewhere around 10.5 trillion in
right,
damages worldwide just from cyber attacks. So
right,
to give you context, and I'm not trying to belittle the whole LA stuff because, like I said, I got
right,
family out there. It is
right,
devastating, but it's one of those things where I'm like, wow, we're heartbroken over this, 400 billion damages, rightly so. But we're also going to see, 20 times that in the next year just from cyber criminals robbing honest goodness businesses, and that's a real problem.
right.
So why do we have to have this conversation? Let's start with the stats. 64% of small businesses have never heard of the term cyber insurance. It's like you said, it's not been around for hundreds of years. It's a relatively new thing in the insurance space. And 48% of companies that currently have cyber insurance, and I have sources referenced in the bottom of the slide, guys, so you can take a look at that. And if you need it, just email me. I'll send you a copy of everything. 48% of all companies with cyber insurance, they typically didn't purchase it until after they had an event where they could have used it, right? Like, oh, wow, this is really expensive. We
It's
never want to
like,
go through that again. Go get the insurance.
yeah, it's like calling Allstate after you wrap your car around a telephone pole, right?
I don't know why it popped in my head, but there was a funny video where it was like the California fires just talking about that, and someone was trying to sing like a good neighbor. State Farm is there, and State Farm's like, nope, nope, I'm
No,
out.
we're not. No, not anymore. We're not. Yeah.
um, and so yeah, and here's the pressing part though. 2023, and that's the most recent year stats we have. 2024 stats are still kind of coming in. It's the beginning of the year. We saw somewhere around 53% of small
Mhm.
businesses from a reports were estimated to be hit by some kind of cyber attack. So more than 1 in 2. Compare that to what we just talked about, right? Like a little more than 1 in 2 have heard of it. Less than that have got it, and out of that, half of those were just because they got hit and then they got the insurance. It's not great, right? Like market adoption, I would say, is very much still in its early stages. Would that be a fair assessment to say?
Oh, 100%.
And we're seeing this. Like
Right.
people are kind of getting eyebrows raised. Like I'm seeing a lot of contracts. Great example of this, franchises. If you run a franchise, you might have seen something popped in your little box saying, "Hey, you need to carry cyber insurance." If you're in the defense space, this year we just passed a new version, or sorry, it
Hmm.
was actually last year in 2024, the new
Hmm.
CMMC stuff. You got
Hmm.
to carry cyber insurance now as part of that. It's actually a requirement in there. And give you an example, the kind of businesses I'm seeing more and more where their vendor contracts or government relations say carry this insurance up to a certain aggregate. Obviously, MSPs. Oh my gosh, we all have to carry it nowadays.
Right.
Vendor and supplier agreements, client services, cloud and SaaS services, data processes, government processing agreements, government contracts, franchises, even real estate transactions. I've actually
Right.
seen this being inserted in real estate contracts where, hey, you agree to provide cyber insurance and cover yourself. It
Right.
is nuts, and it's definitely taking off.
Yeah, and it's interesting. I was actually on stage with a guy from CISA down here. For those of you on the call, if you hadn't picked up my accent yet, it's Southern Arkansan, right? But I was on stage
Arkansas.
with our CISA rep. Yep, and he said back in 2022, he's like, man, I don't have a crystal ball. He's like, but I would imagine sometime probably around 2025 to 2027 you're going to see mandated cyber insurance via definitely from the government, but a lot of private third party contracts requiring it as well. And he was pretty accurate and almost dead on with the timing.
I do a lot of work in the biotech, insurtech, like the venture capital space, and I've yet to see in the last 2 years a single investor agreement that didn't have some kind of provision
Damn
for cyber insurance, right? Like it's
Yep.
becoming almost like being licensed and bonded in the contracting space. You just have to have it to do
Right.
business. And that's absolutely the case. So we need to talk about cyber insurance because if people looked at this, 10 years ago
Hmm.
and then looked at it today, they're going to go, man, I don't remember this being so expensive. What happened?
Yeah.
Like, what
So
exactly happened?
yeah, no, and I mean, you see right there. So, guys, loss ratio is basically the profitability of a cyber insurance carrier. And let's go back to 2019, pre-pandemic. Cyber insurers, pretty much at that time, 2019, cyber crime was relegated for the Fortune 1000, the high revenue companies, the Targets and the Equifaxes of the world.
Mhm.
If you wanted a cyber policy in 2019, you could get one with your address and your revenue and just stating that you hadn't had a loss recently. Just about. That was it, right?
I,
Maybe
I
maybe
got insurance in 2019. That was exactly what I had to do.
maybe state that you aren't in the like marijuana, adult film, or casino industry. Maybe that, right? But no underwriting at all. And obviously, COVID hits, remote work increases, cybercrime shifts down to the mom and pop, and cyber insurers. You see that average loss ratio there.
Yeah.
That's average for the whole industry. There were individual carriers that had loss ratios in the 110s, right? So what that means is, for those of you that don't speak insurance nerd, that means that for every dollar of premium that was paid in, they were paying out $1.10 to $1.20 in claims. You don't stay and play that game long without going insolvent, right? So,
Mhm.
as those losses came in and those ratios increased, cyber insurers said, okay, we got to tighten the purse strings a little bit. We've got to underwrite risk better. We got to ask more questions
Mhm.
about controls. We need to increase premium. We need to scale back on coverage. And the market went through a really, in that 2021, 2022 period, the market went through major stabilization. And we
Yes.
are in a much, guys, I know I'm an insurance guy and we're looking at more money in the pocket of insurers, right? But we have a better idea now of what risks to take on and which ones not to take on, right?
And and
It's
and,
not everybody gets a policy anymore.
and it's important to reference that the amount of damages we're talking about, so little of it's going to be covered by insurance in the broader
Right.
scheme of the market right now. We're seeing right now cyber insurance carriers compared to the average of 4 billion in premiums in 2020, they're carrying about 7 billion now. They're trying to
Right.
collect in more, and their loss ratios compared to 2020, like you said, stabilized. They've dropped about 42%. They
Right.
got very strategic. And they need to take in more money to cover the losses because when they pay claims, that's way more expensive.
Right.
And then they also need to, like you said, be solvent.
Right.
You don't stay in the business very long. For every dollar you sell, you have to spend $1.20 to deliver your service. Like it's just
Right.
basic business economics.
Right.
So let's talk about this, right? Let's talk about these standards because I think that's a lot of what people are looking for here on this call is that standards have changed. You just mentioned one big thing, which was you used to not have to do really any standards to get cyber insurance if you're in the small business game. And that small business, would you say, is about the 1 to 3 million revenue mark is what you were referring to on that, or would it be a little bit bigger?
Yeah. I mean, really, for us, I mean, I would say anything south of 10 mil
Okay.
when we're looking at small business.
Okay. So previously, I was a 1 million plus shop in 2019, and I went down to my local agent and got myself a cyber policy with $1 million aggregate, and I think it cost me like $700. And I was like,
Yep.
great, I got cyber insurance.
Not
Talk
anymore.
to me about that, right? Talk to me about the standards, the underwriting, the process. What can our audience expect today when they go and look for a policy that covers equivalent to the revenue?
Yeah, first of all, for anybody really now, regardless of size, there are like standard entrance. There's hula hoops you got to jump through just to get into the market, right? Where there were none before. Anybody could get a policy in 2019. So even small businesses now have things like multi-factor authentication, backups, patching strategy, endpoint detection is becoming more and more of a
I've been
baseline. And,
I've been
I mean
seeing vulnerability management too now. It's been more and
that,
more
yep,
popping up.
yep. 3 years ago, EDR was kind of hey, if you're a big business, we want you to have EDR. Now we're starting to see it more as a baseline, right? That's a shift. Security awareness training wasn't discussed at all 5 years ago. Now, if you want crime coverage, you better have some type of security awareness training with phishing simulation. So basically, there's been this kind of, hey, here's to use an office space reference, right? Here are the 15 pieces of flair for cyber insurance. That's been established. And then as you go up the revenue ladder and you get into things like healthcare and municipalities and manufacturing and education, the things that have kind of gotten the hell beat out of them lately, you're going to see even more requirements, right? You're going to see certain carriers step out. So you're going to have fewer options in the market, and the options that you do have are going to hold your feet to the fire when it comes to investment in cybersecurity measures.
I mean, I don't think this is shocking news or a change in terms of broader trends. Like, for
Right.
example, I think that the big change is the standards change so quickly. right?
Yep.
Like there's standards that we all accept in the insurance space, have known since growing up. I've known since I was able to drive that if I get pulled over a whole bunch for tickets, get in a bunch of car accidents, I'm not going to have good car insurance or not get car insurance at all, right? Like that is a well-known thing, and I accept that, which is why every time because I got a bit of a lead foot, I get a ticket, I groan on the inside because I'm like, ah, no, my premium is going to go up next year.
Right. Right.
Like I
Same,
understand
by the
that.
way. Yeah. My wife reminds me that I'm the one that gets all the tickets and drives our insurance up, not her. She hasn't had one since she started driving.
So let's talk about that then. So first and
Yep.
foremost, this is something we see a lot of people get caught on. A lot of people.
Mhm.
They see something in their business policy, their BOP battle, and say, "Hey, I you got cyber insurance." And they say, "Okay, it's good. I got it covered." Talk to me about that. What are you seeing in that danger sphere of what's typically happening, and what are some of the signs that someone can look at and say, "Oh, maybe this is me."
Yeah. So these BOP or business owners policy add-ons, right? They are what we call the warm and fuzzies, right? Like you go to your agent and you say, "Hey, do I have cyber insurance?" They're like, "Yeah, we're good. We got it. See right here. It says cyber. You're good."
Yeah.
And the biggest issue there is, I mean, loss quantification, Logan, has gotten to be such a hot topic in our industry. You know, if you've got a business owner's policy add-on that says cyber, but it only has 250K of coverage, which sounds like a lot.
Hmm.
Go back to your previous slide about the average loss. I mean,
Hmm.
what if I'm a $50 million revenue hospital that has tons of PHI line all over the place, right? I'm going to lose more than $250,000. So part of it is loss quantification and aligning the aggregate limits of the policy with your average exposure, right? The other part is a lot of the riders and add-ons just don't have the depth of coverage. When you look at things like reputational harm, cybercrime, dependent network interruption has been a massive topic between CDK Global and Change Healthcare and Power School over the last year. Having some coverage on there that covers you in the event that you don't have a breach, but one of your vendors goes down. Those things generally don't exist on the average business owner's policy. So not only is it an aggregate limit issue, it's a breadth of coverage issue as well.
One of the ones I came across recently, just as an example, it was a Bob app, right? It was something that the business was around 3 million revenue, had a business owner's policy with errors and emissions, all that good stuff. You want to have that to be clear. Like I carry errors and emissions if you're business, especially if you're business to business. But they had a data breach coverage for 250K.
Yep.
But when you read the policy, it was just for data breach coverage. It didn't cover like the legal penalties of data breaches. It didn't cover, hey, if someone ransomed the environment, all the damages that are going to come out of that, the things you have to do to get in compliance with that stuff, to get your computers replaced, financial fraud, right? Like all these
That's
things that we hear about in the news, none of that was covered. And so on the surface, if you didn't read it, you got the warm and fuzzies, like you said. Oh, I got 250,000. Again, that's not enough money, I think personally, but okay. But you only have it for this one specific thing when there's another 7 forms of damage that are likely going to happen in the event of a worst case scenario.
Yeah. And the financial fraud piece is where I would encourage anybody that's on a business owner's add-on really button down into, do I have the right financial fraud or cybercrime coverage? Because I mean, I've seen even at the MSP level, folks that are supposed to be at the top of the chain when it comes to cybersecurity, you can still have somebody get duped on a bad invoice, right? And I've seen MSPs pay out 60, 70 grand and then go to file insurance and them only have $5,000 of crime.
And people underestimate those damages. We have a local municipality here near Columbus. It's about 45 minutes west, and there was a really famous story last year that really I got tangentially involved in. We helped them with a risk assessment. Long story short, it was a small city municipality. It had a small Parks and Rec department. It was like a nonprofit, a tiny little
Mhm.
department. 7 people work for it. Like $1 million a year annual budget. Um, Looks like a very sophisticated, and I wouldn't say this publicly. I wouldn't say like put my money on it, but honestly, kind of looked like for me based on the news, it sounded like a nation state.
Right.
Went after them and managed to divert almost $750,000 out of their bank accounts.
Wow.
Like that
Yeah.
was their entire operation budget. And you think,
Yeah.
how did nobody catch that? And these criminals are slick sometimes. They really
Yep.
are. So, what does this mean for our people in the audience when the market changes in this year? Okay, well, first off, the premiums, if you shopped around 5 years ago, they're just going to be high. Now, I will say, and you can confirm this, I've seen a little bit of a cool down on how fast they're growing. It seemed to kind of stabilized a little bit. I mean, I think my premiums were a tiny bit higher this year than last year, but it very much isn't like what it used to be, where it was like I'm doubling year after year. Is that
No,
fair to say?
no, you're not seeing the. I mean, there was pretty standard 40 to 80% on renewals there for at least one renewal cycle around 21, 22, and the market is what we would call selectively soft now, meaning that if you have the right controls in place and you're operating with a carrier that likes your sector, there are actually savings out there.
Okay.
So yeah, I mean, I would say more flat to slight increases to be expected. And then depending on the carrier, the sector that you're in, and what controls are in place, potentially savings.
Okay. And we talked a little bit about specific coverages a little bit. And just to tie into that, like you need to know what your policy is. This is where having a specialized or someone with some expertise in the cyber insurance field, an agent or a brokerage that knows what they're doing can really help because your policy's language is going to dictate what coverages you have. Is that fair to say?
100%. I mean, I think of nonprofits. I see nonprofits all the time that either have no coverage or they have some coverage without cybercrime, and their cybercrime piece is their number one. I mean, that's the biggest threat, right? That and reputational damage. And we get, I mean, almost to a T when we have a nonprofit come across our desk, they don't have cybercrime or reputational harm on their policy.
And we're going to talk more about this in your slide, but we're going to talk about the underwriting standards too that we're seeing more and more, and I want you to comment on that. I do want to address one thing because when people talk about cybersecurity and cyber insurance, I hear a lot of FUD thrown around, fear of uncertainty and doubt, when it comes to claim rejection.
Right.
And I want to talk about what claim
Yeah.
rejection really looks like, because when the
Right.
market, it's not, hey, you had a legitimate claim and the carrier said denied. It's okay. Let's talk about the reason we see claims denied, because deny is a big term. It just means that
Right.
whatever
Right.
reason the carrier is not going to pay, but it could be a legitimate reason. For example of this, maybe your aggregate wasn't enough. Maybe you had $1 million policy and your damages were at 1.4. So guess what? You got to pay the difference because the carrier only agreed to insure you for $1 million. Another one I'm seeing a lot of, because people panic when a cyber attack happens and they start hiring experts and lawyers and IT teams before talking to their insurance carrier, going off road. You incur a lot of costs that the carrier didn't approve because you panicked and had to try to get stuff up and running. And the
Right.
carrier then denies reimbursing those claims because they're going to say, you didn't ask us, you just did it, and you made our job way harder.
Right.
And then
And that's,
lastly,
I mean,
go ahead.
sorry, I just want just to tap in there. Think about it as a crime scene, right? I mean, if there's a murder and there's, blood on the floor and glass and stuff, like nobody, I mean, like as gruesome as that may be, and as much as you want to fix stuff, people know not to run past the police tape and start trying to clean up, right? So, I
I
mean, think
thought of
about it.
I thought
Think
of
about it that way.
Consuela from Family Guy going, no, 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 like cleaning everything up when you said that. I don't know why.
Right, right, yeah. That's great.
And the last one, I mean, so we did there was a survey Sophos released. This report comes from, where it was 5,000 small businesses, and there was a small but significant slice that fell out of compliance. Basically, they had tested on their insurance, hey, we have something when they signed up for it, and then upon investigation, because that's what carriers do, where they pay a claim, they look into what exactly are we paying, what happened. They didn't have it, and so the claim was denied on based on misrepresentation. Hey, you told me you had MFA. You told me you had EDR. You told me you had annual cybersecurity training. We can clearly see you didn't, and it would have actually had a material impact in this event. So yeah, I think 14% kind of is the part where people focus on in the cybersecurity land, and there's legitimacy there, but it's not the
That's
full
it.
claims picture.
This is honestly, it's probably my favorite slide you put in here because I always talk about like boogeymen in the channel.
Mhm,
That 14% might be the biggest boogeyman out there, right? It's like people
mhm.
are like, oh, I, you know, I had a policy and then they came in and they found out I didn't have this control and they denied my claim. Okay, hold on. First of all, let's back up. Number one, did you say that you had that control in place when you applied? Right?
Yeah.
Did you just straight up lie? Right? Did you have it on and then you took it off? Right?
When I've
Um,
seen this come into play, I've seen this come into play exactly twice, and it's because I can't say who because it's still not settled, but it
right.
was an agent checked some boxes on behalf of the person that was buying the policy that he should not have checked for the agent for the
Yep.
person,
Yep.
and they didn't know they were checking and attesting to, and that got the underwritten very much in trouble.
Ooh, don't get me on my soapbox, right? But yes, the cyber insurers. a little bit of that lays at their feet. And I mean, we're a broker, not a carrier, but I mean, the carriers have given some technology to the agent that gives them the ability, if they so choose, to go, yes, 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 yes. And obviously they should never do that. But I tell people all the time, Logan, that like, and the stats show it here, a denial, the denial is a big word, right?
Yeah.
Or were you denied, or did you hit your limit, right? Did somebody not quantify your loss, and did you have $1 million policy, but you were at risk for a $2 million loss? That's not a denial. That's a lack of education on the front end, right?
The big one I've seen, honestly, in the off-road section too, it was I paid the local IT guy to come in after a ransomware incident and factory reset all my computers so we can get things up and running. Well, you just like you talked about crime scene, right? You just destroyed the crime scene. The carrier
There
has
it is.
no way to quantify the losses that could have
Yep.
incurred because you've destroyed the evidence. So
Yep.
yeah, they're not going to pay for a lot of that stuff. They can't tell what the actual quantified damages are.
Sure. Sure. No,
That's
this
fair.
is good discussion, because there's a lot of opinion out there in the channel, and then what we see on our side is just not that at all.
So we're at the last 5 minutes here, so we're going to get to now the big meat and potatoes, I say, of this presentation. So TLDR, if you haven't gotten cyber insurance before, expect to go through a little bit of a game. If you don't have a history with the carrier, I think it's fair to say they might put you a little bit more under a microscope than they normally otherwise would, because they're going to potentially absorb losses they don't know about from past Yellow. Is that fair to say?
Yes,
Okay.
100%.
When you file a claim, it's not next day payouts. It's
Nope.
there is some scrutiny. There's IR sometimes, a lot of times, investigative response. There are lawyers that are going to look at the claim itself. I've seen, and I know it depends on the type of claim, but in the case of financial fraud, Andy, I typically see them somewhere between 60 to 120 days before the claim's settled and the check's written for financial fraud. I know in the case of like ransomware and stuff like that, there's some exceptions, but in the case of things where there's a little more of a time gap, is that a normal time frame to expect
Yes,
for the claim
I would. Yeah,
process?
I would say that that's accurate. Yes, sometimes it
And
depends on the carrier. I mean, you'll see sooner sometimes, but I would say that's pretty accurate.
okay, and you mentioned this already. You got to know what you're doing in order to get the best rate because the market is very much selective on that. So successful claims require some form of due diligence. That's the takeaway I have for this. And people are going to ask me diligence about what? Okay, well let's talk about another boogeyman real quick in the last 3 minutes. I'm going to go through the story really quick. This is the story everybody fuds about. And it's got some legit lessons to learn from it, which was there's a firm called ICS in Illinois that has cyber insurance for policy for $1 million from Travelers Insurance. They misattested on their warranty that they had certain controls. I think specifically the one that got them in trouble was multi-factor
Well,
authentication.
MFA. Yes.
Yeah, they didn't. They said they had it. They didn't have it. The whole thing went to court, and the judge ruled, no, you definitely lied and contract. You don't get pay. They appealed, and Travelers also won an appeal. So the claim was denied. But here's the takeaway: if ICS had bothered to due diligence what they were attesting to, they never would have been in that situation because they could have clearly shown, yes, we have it. Here you go, Mr. Carrier, and the claim probably would have been settled without any muss or fuss. So, what kind of standards are the underwriters expecting? And I know this list is not exhaustive, Andy, but the kind of stuff
Right.
I'm seeing when our clients come to us include things like firewalls, MFA, some kind of way of handling PII, personally identifiable information, encrypting sensitive data, backups, business continuity. Hey, if you make a claim for being down in business, do you have a plan to get back up and running within a reasonable time frame? I
Right.
see cybersecurity training, some way of managing passwords. They want to make sure you're not using password 123 and all your stuff. Anything in here that you think is not what you normally would typically see on a robust cyber insurance policy?
No, it's all. I mean, all correct. Like I said, I would say kind of the low hanging fruit now is MFA, EDR, backups, patching strategy, and awareness training. Those are kind of the low hanging. But all these things are asked, and depending on the size and the scope of the entity applying. I mean, you could see this and potentially more, right? I mean, 24/7 monitoring, privilege access management, those type things.
I think most
Um,
of the business continuity and IR comes an instant response plan, specifically when there's revenue loss coverage. I've
yep,
seen that been pretty recurring because they want to know,
yep,
hey, you're going to be down for a few days of revenue recovering, not multiple months, and
right.
that's a reasonable ask.
Right. No, 100%. And that IR plan specifically, we've seen that was not even remotely asked 5 years ago. And it started every single MSP, by the way, that I have applies for coverage is asked if they have an active IR plan.
Dare wants to know, have you seen a more requirement for what she calls DLP requirements? Have you seen an increase of that? Like how you handle your data, encryption, managing confidential information. Are you seeing more of an emphasis on that in the warranty process?
It depends. It depends on the sector. I would say when you've got, in sectors like healthcare, yeah, absolutely. And I've seen people, if you, if you, if you're a hospital and you're taking in 10,000, or more new records a year, and you don't have a process to get rid of that data on the back end, and you're not encrypting it while it's sitting there, right? Yeah, absolutely, there are people asking, those type things and adjusting rate or denying quotes because of it.
We put together a special offer today because that list is not exhaustive. And if you want to get an idea of, hey, I've never really done cyber insurance, or I don't know if my policy's up to snuff, and want to get a sense of what kind of things the people are going to ask you in the underwriting process, we've actually put together a cyber insurance readiness assessment. It's a 10-minute survey, and you can go to it at ttscyber.net or just scan this QR code, and you can see and kind of go through the experience of, okay, what do I have and what don't I have that typically a carrier might ask me. And again, I think it's important to mention, like you said, it depends on your industry, depends on the vertical, depends on, what your contractual obligations are, your sensitivity. There's a lot of factors, but generically speaking, the stuff we put in here is stuff you're going to come across in the wild and that small business range. And yeah, what we'll do is we'll email you your results, and it's all customed out, and it gives you an idea of if there's a gap. A great example of one I've seen a lot of is vulnerability management. A lot of people have no idea what that means. And I
Right.
do see it now. I do see it in the small business carriers. Chubb, I've seen a lot of Chubb asking for vulnerability management lately.
Yep.
Hey, you should probably learn what that is and how to handle that. We can help you with that. This is not, I'd say, is the action plan for the year. If you're in 2025 and you don't have cyber insurance, get the right kind. You need cyber insurance. I know we're biased, but that's the takeaway here. You need cyber insurance. You need to get the right kind of coverage. Don't be left out in the cold because you didn't get the right kind of coverage, or you trusted an agent that added a BOP on. You want to work with somebody who knows what they're doing in the insurance process, like Fifth Wall Solutions. That Fifth Wall, I believe you told me that you guys all you do is cyber, right? That's it.
Correct. Yeah, cyber and E&O, and that's it. We don't do any other lines of insurance.
You need to do a little due diligence too. If you're the one signing the contract for the insurance, read the testations. If your agent is checking boxes for you, I would say maybe be a little skeptical on that. I'm not saying they don't mean well, but you want to understand what you're agreeing to on the standards. And also, seriously, read the fine print of your policies. The amount of people, they actually just sat down for 10 minutes and started reading the policy, they would see some red flags sometimes in these less than ideal policies, these BOPs, right? Like there's some stuff in there I've seen like, hey, I've got $1 million in coverage, but I only have a $10,000 sublimit in financial fraud. That seems weird. Why do
Right.
I have a million here and 10,000 here? Maybe
Yeah.
I should talk to somebody.
Yeah, those gaps in the aggregate and then what we call the sublimits, probably my biggest frustration in the industry right now. Again, going back to those warm and fuzzies. Do you have a policy? Oh yeah, we've got one. We've got a guy. It's $1 million. We're good. And then you get into things like the, financial crime, you get into reputational harm, you get into independent network interruption, business interruption, and it's like, oh, there's only 25,000 here for those. We only have 50K for ransom payment, and the average ransom payment was over $400,000 in 2024, right? Those are the issues.
I had a policy that was like that. It was like $1 million coverage. They only paid $800 a year, and I was like, okay, I'm not an agent, so asterisk, don't. I'm a dummy, but let me look at this. That's exactly how it laid out. Was there was $50,000 in coverage for financial fraud, $50,000 coverage for ransomware, $50,000 coverage for business interruption. Like the chances that the aggregate of $1 million on that policy were ever going to be hit in the real world were just slim to none, which is why the
No way.
policy cost what it costs.
No way. Right. You'd have to have 20 events in a year to get to the aggregate.
And the carrier knows that. And so you
Right.
can't fault the carrier for not reading what you sign. That's the other
Right.
thing, too. They're going to say that.
Right.
Okay, guys. Well, in that case, we are adjourned. I am going to go ahead. We're 3 minutes over, but I'll stay on for those 60 seconds. If we have questions, I see some typing in the chat. But thank you so much for joining us. This has been a great turnout. And honestly, I always love chatting with you, Andy. Oh,
Yeah, no, I
Janet says thank
appreciate
you.
Yeah, yeah, thank you, Janet. Appreciate you having me on, Logan. And obviously, I mean, what we do is a niche of a niche, but really, really enjoy getting to talk about this stuff.
And we're on the good. I want to say too, we were out there trying to spread the good word. This is going to be the future of you need to have this kind of coverage. It's good to know what you're getting into, since a lot of people say have never explored this before. And I'm glad we get a chance to educate people. Thanks,
Yeah,
everybody.
thank you guys.